Housing markets all across the U.S. have exploded with activity throughout this pandemic, and there's been a rapid price increase driven by eager cash flush buyers and a huge lack of available inventory of homes for sale. So, have you seen this? Developers have rushed to meet this wave of demand, but after years of underbuilding the number of homes that are actually needed for the growing U.S. population, the current reality is setting in. There's a combination of supply chain crunch and a tight labor market. So new construction homes have just not been produced quickly enough to stem the tide of rapidly rising prices. Now, even with an increase in new construction over the past year, housing markets all across the United States remain undersupplied, and this is all according to Realtor.com. The data is based on the actual sales permits that are pulled from December 2020 through October 2021. Now, of the 338 U.S. metro areas analyzed, only 9 areas showed construction permits outpacing sales. This is like Austin, Texas, and Provo, Utah. So, new homes are just a small portion of a really important segment in the housing market, and this is especially now because new construction has lagged behind household formation for so many years. Experts say there's a 5.2 million home deficit where household formation has outpaced single-family buildings, and especially in the affordable housing category. So that's a big hole for us to dig out of. Developers would like to build and sell more houses, but there are severe issues that are holding them back. Now, LegalShield.com showed the National Housing Construction Index has dropped slightly in December 2021, indicating a small dip in housing starts as builders contend with a variety of economic obstacles. So, with the continued trends that we're currently seeing right now, we would expect that housing starts will decline at the end of the first quarter of 2022. But the one thing that we see during these inflationary times, as we have right now, is there just isn't enough building supply materials in stock. You know, builders are slowing from building more because there's just not enough trucking, port capacities, materials, and this leads to the starts and the stops during the construction process when its builders are waiting for windows, doors, siding, roofing materials, all sorts of plumbing, HVAC systems, electrical components, and it takes longer for homes to be built as they sit for periods of time just waiting on parts. So with the housing market inventory issues front and center right now, we're seeing both buyers and sellers that are interested in the current state of the local housing starts. Why? Because those numbers are the crystal ball for their local real estate market moving forward in 2022. So what does this construction data actually mean? What do we do with that? Now, supply and demand are as simple as seeing the housing starts and assuming with more homes coming to the market, since prices will go down. Now, supply is only one side of the equation. Housing starts or building permits reflect the builder's sentiment, and more than anything, that's looking at the growth of building permits in a local area is one of the best ways to see that builders are optimistic about the future of housing in that market. Now, because the construction process is a slow process, becoming even more slow with supply chain issues and labor issues, housing starts tend to be lagging indicator and don't necessarily guarantee that the home project permits will actually be completed by and really end up on the market. So housing starts are one of those leading indicators that economists are always watching. So because it will tell you about the future activity, although permits don't always become a home. A huge backlog in construction of single-family homes, and that's because of the shortages of labor and materials. So given such housing supply shortages in just about every single market in the United States, potential sellers aren't necessarily worried about competition from new projects in the area. We're also seeing potential buyers who are expecting new inventory to not take so much pressure off of the prices. So it's a good thing to see housing construction picking up, especially at a time when there's so many houses that are not on the market. But we do need more houses in the United States. We need more affordable housing options. So if we're buying, you want to take a look at the area where you're thinking about buying. And the reason for this is you want to look at what really seems like you might have a lot of homes for sale or vacant land under development. These are things to watch because it will impact the future of your home. But not always, because certain areas will get developed and that can bring in more restaurants or shops or even infrastructure. Now, if you're buying, look at the inventory levels and where they are right now. And most places in the US are still solid sellers markets. So you don't have to worry about a flood of new homes affecting your property values. But in the United States, we're still in a very tight real estate market. And the same thing holds true on the seller side of the equation now. Because if your property is seeing, higher concentrations of new supply on its way to the market, it could be advantageous for you to sell sooner rather than later. So especially if you're trying to time the sale of the market, like if it's an investment property, for instance. So for the most part, builders are simply trying to catch up with all the huge surges in demand. When you see a lot of new construction in your market, that's a sign that the long-term economic growth is going to be probably okay. Those are good conditions to hold a property for 5 or 10 years. So understanding the bigger picture here, where construction starts, are just, one piece of information. This is a highly unusual housing market. So savvy buyers and sellers would do well to keep an eye on a variety of other things, not just the building. Home builders are responding to the market demand. And if they see an increase in demand coming from this huge migration of population, like here in Myrtle Beach, South Carolina, we see many baby boomers who are retiring and moving to the beach. They're buying their vacation home or their retirement home. We see many that are moving south. They're moving away from higher cost of living to a lower cost of living and lower taxes. But my real estate team is also seeing investors buying and digging deep into the numbers to find super low vacancy rates. And they're also increasing rent revenue. So that's what my team does every day, and they're good at it. But on the other cities in the US, if you start to see vacancy rates start to rise, that could be an indicator of a slowing price pressure in that market. Now, while there may be a lot of construction in cities like Myrtle Beach, South Carolina, Dallas, or Houston, vacancy rates are remaining low and stable. And this is a sign that the new supply is meeting the demand from people relocating to those markets. So also, construction permits are outpacing sales in cities like Austin or Boise and in some places like Utah. However, those places may see a slowing price growth, but don't believe those areas are really going to come to a complete stop. Even rising interest rates are unlikely to put significant dent into the activity in this immediate buying future. The reason is because wage growth is also really strong and buyers are going to continue buying. Now, this is very important. I need you to listen to this. There's two things. Number one, spending too much time trying to predict the tea leaves and predict future price trends or attempting to time the market perfectly is a failing formula. The rewards go to the risk takers. Now, I'm just going to tell you personally, I've been investing in real estate for the last 36 years, and I've also bought real estate in the historic worst markets when the gurus said don't buy. I've also paid 13% interest on mortgages, but I am super glad I bought when I did. The one thing that I always hear from wannabe investors, I should have bought, I wish I would have bought, or remember when those things were going for this much? Now, you can't time life. You can't get ahead in life just wishing. Jeff Bezos, Elon Musk, Bill Gates, Warren Buffett, they didn't just wish to become wealthy. They had a plan and they took action. Now, number two, if you're thinking about buying a home, and you're going to stay in that home for 5 to 10 years or more, history tells you that your home is going to improve in value. Now, houses aren't like stocks. They don't go up by 50% in 1 year, and they don't go down by 50% in 1 year either. If you're in an area that's oversupplied, you shouldn't rule that out because you do have more choices and more possibilities to get a great price right now. But just like anything else, there's no hard and fast rules on real estate. It's hyper local where you are. Okay, one area in the nation can be doing great while the other sucks. So I want you to think further ahead. I want you to think more than a year. I want you to think, long term, okay? We don't know what the future brings. Recessions can happen, material shortages can happen, pandemics can happen, recessions can happen, inflation can happen, but real estate historically over time increases. And history shows that the risk takers get the rewards. So comment below, let me know what's going on in your world. I really want to know what's happening in your life. So what are your plans? Or do you have a plan for that matter? Are you a small investor or a first-time home buyer or a big-time investor? Have you seen success in your life? How much did your home go up in value last year? So what do you plan to do and what are your moves next? Let me know, because I really appreciate you. I thank you for watching. If you have subscribed, I really look forward to sharing more super helpful videos just like this. And I hope you've been enjoying these videos for sure. Give me a thumbs up if you have. And wherever you are and whatever you're doing, I hope you're having a fantastic day, and we'll see you in the next episode. Take care, guys. Are you still there? See ya.